What's up, traders? Hope everybody's having a great weekend. Want to do some analysis here on the E-mini S&P futures as well as the NASDAQ 100 futures and Q. Going to go through some bigger time frame analysis as well as break it down and look at some day trading levels for this week as well. In addition to that, of course, we are going to look over some of the other data points that we usually look at to help us gauge what may be the most likely scenarios coming into the start of next week and into the end of the week. As always, though, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, so with that said, we always kick off the videos here, starting off with the economic calendar for this week as well as earnings. Most of the major big names have passed besides Nvidia, so we do not have as much of a influence on earnings up until that name reports later in the month. But with that being said here, let's get into some of the economic calendar first, and then we'll take a quick look at the earnings for next week. All right, easy week ahead here. We just got through FOMC, non-farm payroll, and here we do not have too much on the docket for us this week. Love to see it. Monday's pretty quiet. ISM services, PMI at 9:45. Tuesday, nothing really going on. Wednesday, nothing really going on. Initial jobless claims on Thursday at 8:30. We do have Fed President Barkin speaking at 3 o'clock later in the day. Nothing scheduled for August 9th on Friday. So that is looking like a quiet calendar as far as economic data is concerned. Of course, the following week we will have a big week with PPI and CPI. So that will be the major catalyst next, the following week after this week. All right, let's look at some earnings here really quickly. Like I said, we've got most of the big names out of the way, so it's going to be really second tier tech and just some other names sporadically throughout different sectors. So what do we have here? Anything interesting on Monday? Well, I think a lot of people will be watching PLTR, Palantir, everybody's one of people's favorite meme stocks. We have Uber on Tuesday before the market opens. Celsius, another one, just like PLTR, kind of a meme cult following. They're reporting before the market opens on Tuesday. Caterpillar, I think, will be interesting. Not really a market mover, but I think interesting to watch as far as construction spending and things like that are concerned. Rivian, another cult stock there, reporting on Tuesday after the close. Airbnb, Win, I think could be interesting as far as expendable income from consumers out there, see how much people are gambling. Upstart reporting as well, kind of a cult name, but no one knows what it does. Shopify on Wednesday before the market opens, and Walt Disney, I think that'd be interesting as well to look at Walt Disney's numbers. Lyft then on Wednesday as well. We can also kind of maybe get a gauge for how Lyft is going to perform based on Uber reporting before, so that will be interesting to see. Robinhood after the market close on Wednesday. Eli Lilly on Thursday before the bell opens. I think that would be interesting to watch. But then there's really not too many other names that interest me for the rest of the week. So that will wrap that up for earnings. All right, so let's get into some technical analysis here. Let's start to take a look at the monthly chart because we are just starting off August. Summer is flying by. And what can we take away here from the monthly candle that has printed and where we are right now as far as location? Well, certainly a very large bar here on the downside, opening up. Rough start to the month, and really what I'm going to be watching from that monthly perspective. Now we obviously still are in a monthly uptrend, but we are starting to get in a little bit of an area where it could be a little bit of an issue, right? So We have our swing high, right? We made our higher high. Now we still have the chance of this being a monthly higher low being put in. Overall, we are still, of course, way over the daily 9 and 20. So that is all well and good from there. But this is the opportunity here for the bulls to step in. And you're going to see from the structural perspective, what do we have here? This prior balance, right? That also gave us pretty much that bull flag breakout that we saw propelling us on this last leg higher. You can see here we have our staff, and then we consolidated, and then like we gave us our final push up higher. So we're right pretty much on the highs of this retesting this balance. This is what's going to need to hold. So if we're going to have a line in the sand a little bit here from the monthly perspective, and we're going to have to maybe make it a zone here because it is from a larger time frame, so it's going to be hard to really pinpoint a actual number, but let's just say 5,300. I'm going to say maybe 5,295. We're really going to need to see that hold. If we do start seeing that break under, I would also be just looking potentially down to 52.45 area. I think that that would be interesting as well if we do break under that 5,300 on the E-mini S&P futures. But if we really start to see some weekly closes under this area here, well, then we're going to really have a bigger issue on the chart taking place, and there is that opportunity to see much steeper of a drawdown in the equity market overall. We're not quite there yet, but we just want to be aware that this situation is threatening from a monthly time frame perspective as well here, because obviously the daily and weekly have formed into a downtrend as it stands right now. But this is going to be the line in the sand for me for the monthly perspective. So if we close the month like this, underneath, we're going to have some issues. And then we're going to potentially be even looking at trades to be able to even come down in this area. So that would take us down to maybe 4,800. So we'll have to see. All right, with all that being said, let's move along here. Let's get into the weekly chart, see what we can take away from that perspective. Now, I think that ES and NQ certainly are making a bit of a different story. ES has been a bit of the stronger market along with the Dow here, and we can see now here ES is coming right into that weekly 20. And this has been pretty reliable. At the last downturn we saw, came right into that weekly 20. We did a little wick below, recaptured, and then we resumed our uptrend overall. Now what do we have here? A little wick below, and then, well, the rest is to be written. So we definitely have that potentiality of repeating this same type of pattern once again, but will it happen? That is going to be anybody's guess. I would be in the camp here of potentially seeing certainly some type of a retracement. We've certainly fallen very far, very fast, and I think it's worth noting that we have seen this reaction time and time again. So how strong this rally is, now is this going to be the same thing to make us towards all-time highs? Well, again, we're going to take it level to level and use our structure to really guide us. But we certainly have the potentiality to see some type of a counter trend rally, and we'll certainly show some reasons for that when we get into the daily chart here in just a moment. Now, we have been watching, of course, these hot readings on our overbought, oversold, oversold indicator here, our hello Momo. We were talking about, that we didn't know how long it was going to take till we started seeing some of this cooling coming in. Here we're finally getting it as we were waiting for it. And you can see here we got it. It stayed up here for quite a while, but finally gave way and showed us some of that result. Now, here we are, and it's anybody's question. And we're going to look at the daily now. We're starting to see a little bit of that oversold readings on the daily, as well as coming into this weekly 20. So all two reasons at least that says to me, okay, now do we see a little bit of a counter trend rally? It's very, very possible. All right, so as we move along here, now what has happened, and we're going to see it a little bit better on the daily chart, but we had our first structure break. Whoa, this is not. Okay, we had our first structure break here. But our next structure break really took place right in this area here. Okay, so, and you're going to be able to see this much clearer on the daily chart. But from this weekly perspective, unless we actually see, and we traded up into this prior balance, this prior structure zone here, but unless we see some weekly candle close right back inside here, it is going to be a tough battle here for the bulls. And we can just call this out. For me, or look at the weekly lows of July 1st. That's really what I'm going to be watching here if we're going to mark off a level to watch. And, of course, this is a bigger picture level. We are on the weekly time frame as it stands. So it's going to be a bit far away, but to start to neutralize the weekly downtrend now again, we mentioned the monthly still in an uptrend, but threatening, but to start to neutralize the weekly downtrend that we have created, well, I'm just really going to need to see confirmation basically over 5,500. So until that happens, again, far away, right? Basically, over 200 points away, 150 points away. So, we've got a lot of work to do there, but that's going to be the first thing that we're going to need to see for the bulls to really start to see any type of relief. Now, again, we're talking about this counter trend rally potentiality, and we'll get into that in a little bit. But just from this weekly perspective, using our range theory, we can also go ahead and mark off what do we first look for? Well, 25%, right? And that probably would really give us the high from this July 3rd weekly high here. So I'm going to call 53.86 half for about that 25%, and then getting real close to that. And we might not even make 50%, but I would also be watching the previous week's low. Just 54.32 half. Okay, so there's two key levels there I think will be worth watching. 53.86 half. And that is just about 30 points higher. Potential short zone there, but if we break over, I would be very interested, and certainly if we get over 5,400, I think that really is going to give you a little bit more of that confirmation, seeing that acceptance over 5,400, and then I believe the bulls will go ahead and start to try and retest that 54.30 area, 54.32 half. Anywhere 2-3 points in that zone I think would be the next reasonable area to consider for a long target. Now, of course, looking at that short side of the trade, since we are still in a downtrend, yes, we can look for, if bearish, we don't want to really be shorting here in the hole. This is a silly short. Risk to reward is not good. And I really, even coming up to 5,400, yes, you have to consider that. It is about 45 point bounce, so that's not too bad. But I feel personally it might be too obvious, quote unquote, of a short just the high of this prior balance right here as well. Whoops, that's not what I wanted to do. Okay, my apologies. Oh, come on now. Give it a second. Okay. And that would be attacking the high of this prior balance right here. Right here. So we can also say, and then we see back down. Right? Certainly a scenario. That is certainly a risk to reward to consider. The first place I would consider, I just don't feel like they are going to make it that easy. Again, we'll wait to see if they really show a sell reaction there. Then you have to consider it a little bit more instead of maybe taking it direct. Or even better, if you see a look above and then a fail, well, then that's going to give you even more of a kind of confirmation, in my opinion. That's really what I would like to see if I was to take the short. The one I'd be a little bit more interested for would be closer towards the previous week low, right around that 54.30 area. That one would be a little bit more interesting to me personally. See something like this, and then we go ahead and attack that lower low, coming real close to that 5300. Now that 5300, that's the zone right there. If we lose 5300, look out below. I think it'd be very likely that we'll come in, retest the low of this structure balance, and really come in and see probably about 40 50 points lower, maybe towards that 52.45 52.40 area. Very possible if we in fact break that 5300. So pay attention to that as well. But I think that really the most bullish sign over that 5400 for that bull case. All right, let's look at some of the, before we get actually into this one, I did want to kind of just show you guys some of these trend lines I was looking at. Oh, where is it? Oh, it's not the right one. You can see here this previous channel that we were trading in. This was back in 2023. Uptrend, 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 uptrend. This is when we finally broke in the 20 at the springtime there. And we recaptured that trend line, but you can see what also really happened here, that where this whole downtrend really took place was retesting, right, this prior trend line channel. So I think that that was interesting to note. We tried to get into this next uptrend here that we had previously broken. You can see the reaction right here. Stopped right here, right here. Okay, so I think that that's interesting. Now we don't have enough data to really formulate anything quite yet here, but as it stands, at least from this model, we have to consider that unless we saw price really come back up and recapture back into this channel, it's going to be a hard time coming. But we'll have to see. You know, we'll wait for price to do its thing and see what we get, and then we can map out a little bit more on this viewpoint. But I think that that's interesting here, and we've got that at least mapped out for now. All right, let's get into the daily chart just here on our blank chart that we have been working on here together. And let's pull this up. We're not there yet, but we have to just also just look at this area. We're not there yet, and I'm not saying we're going to get there. But we definitely, at least I have to consider if things start to get real dicey. Just throwing it out there for now. Again, we're not there yet. All right, so on the daily chart here, clearly here back below our daily 920 and 50 EMA. Now we have to note we're not quite totally oversold yet, but we're just starting to get in here. We haven't seen any type of momentum shift quite yet here, but we are going to be certainly paying attention to this on the daily chart, right? And now we are going to be looking now what happened, right? Now let's also break this down a little bit again. We have our structure here, came back, retested, right? But what else? And it's a little bit cleaner on the tech sector. But what else do we really have here going on, right? We've got, let me do this, head, shoulder, shoulder. This was pretty much our neckline right here, this previous structure. And when we broke the 5,500, we already talked about that level earlier. Boom, it was game over. Right, now what else do we have going on here, right? We broke, again, the structure. But we have our swing high. I'll make this as our structure, right? We broke it. And what happened then? We made our lower low. Right here when we broke, this is what changed everything of the structure in the market. What was this retest of this structure, right? This was our lower low, so we put in a lower high here. Came in, put that lower low in. What was this retest? Just the lower high. And now we have come in and made that lower low. So when I'm talking about that potential counter trend rally, now look at this aggressive move we made over the last 2 days. Look how far away we have between our space, our location and space, between our moving averages. Are we going to come up and retest the 9 and 20? I mean, that's a bit aggressive. I would say probably not. Maybe, but I would say probably not. But is it unreasonable to at least consider, now if we're following the trend sequence, now we've just completed the third leg of the trend cycle, consider coming up, and I would already talked about that 54.30, back testing these prior lows, and then we'll go ahead and make that fourth wave to complete that lower low. So again, you have to also be, that 5,400. Yes, that could of course be a short, but am I that interested in it personally? No, not really. This one's way more interesting to me. Basically, you can see right here, back at this type of balance right here, right? Targeting the equal lows at first, of course. And then if we break, we look for that lower low right around that 5,300. And that's the critical area. Under that, we can drop down into this zone here and start to threaten, right, this previous shift in the market. This is what shifted the structure when we broke right here. Whoops, I didn't mean to delete that. I'm sorry. structure. Oh, that's not what I wanted. Structure shift here, right? And in the opposite way. It happened here, right? So here you've got both examples, a bullish and a bearish shift. So let's see what happens. We also have just made a huge move to the downside. A huge range. Markets are running or resting. Expansion, contraction. Is it also that unreasonable to think that we end up just either trading in a range like this? Maybe it ends up being this high, but we digest this move and do something like this. I think that that's reasonable to consider as well. So be careful for that tricky price action this week. Not too much data, but certainly a lot of price action digestion that's going to need to take place. We'll see. The most bullish sign is we're going to be recapturing 5,500. Until then, it's going to be rough. Go really quickly here to our old chart. How did it play out? You can see here, look below, look above, failed. This was our zone that we were watching. Broke under here, game over, took it all out. So, again, here's that 5,400 still mapped out. Would it be this easy? Or is it going to be this one? Both options. We start to get over, okay, we can start to talk about some type of a neutralization of the trend, but nothing quote-unquote bullish too much yet. One step at a time. All right, let's get a little bit more granular here with ES, and let's look at some day trading levels for this week. I'm going to mark this off for us. I wasn't marking. Okay. There we go. All right, cool. All right, so let's get a little bit more granular here with some day trading levels for us for next week. Well, let's see what we got. All right, cool. So I am going to be watching now. It's going to be really tough to get too bullish. Full disclosure, I am swinging calls on SPY over the weekend. But can I really get too bullish? Unless I can't get too bullish, unless at least, at the very, very, very least, we're over 53.85. 53.86. Need to see that. Start neutralizing that trend a little bit. Then we can look to attack 54.30. This is basically that area where I mentioned a potential short. Nice confluence here with the 4-hour 9. And you can see here why we were talking about this also potentially being that short zone. So, however, if we see this, you can look to attack. There's a trade there, 53.85 to 54.20, 54.30. There's certainly money to be made on this trade. Short zone, that's the question. Do we get a double bottom? I don't know. Or do we break and then go ahead and attack the lower lows? That's either way what we'd have to consider. Over the 54.30, well, then we can get a little bit more interesting. Maybe we come up into the 54.55 area, but this generally will be a bit of a trap zone, so I'm a little bit, not too interested in that. But over the 54.60, and then maybe we can look at that 54.80s. I think if we get over that, then we can start talking about that 5,500 area, maybe 55.20 to retest up into this zone. You start seeing this. And of course you have to consider the opposite side there. Potentially starting to neutralize the trend, or if we get over here. But have to consider the short in this area. All right, that's all I've got for ES. Let's break it down here with NQ, everybody's favorite futures widowmaker. And take a look at what we can take away here from the monthly perspective. Definitely a bit of a different story when it comes to tech versus NQ. Now we still, of course, are in a uptrend, but very similar in the sense that here on NQ you can see from the monthly perspective, now we have broken inside. Now we do have the monthly 20, or excuse me, the monthly 9 period moving average, EMA at 18,150 basically. So I think that it'll be interesting to watch if we do come into that. Could that be the potential springboard for tech, bringing us back up? But you can see the difference here in the tech sector falling inside. So that is normally not what you want to see. I'm going to be definitely paying attention now to about that 9. Maybe we don't come down that, excuse me, about 50%. Maybe we don't come down that far. But as long as tech, we're going to have to say this one is a bit more threatening. Let's hope. And it's close. $18,745. Let's look at that July low. So about 200 points up. Have to pay attention to that. Right in this area, and you can see, boom, boom. From the monthly perspective, you gotta see this. Or, of course, this is the August, a wick, this body to start to fill up this way, and we get more of this here. That's going to be the best case scenario. We're not there yet. So over from the monthly perspective, 200 points over, higher, we look to see over 18,700, feeling a bit better from the monthly view. We stay underneath. Well, then watch out. We'll look again to about half of our balance, and it also kind of lines up right there with that monthly 9 period moving average. We start to get under that, okay, well then we'll start talking about even more of a retracement at the bottom of this, down in the 1750s, 17400s, because we're not there yet. All right, let's get into the We're going to keep this monthly level on, but let's break it down and look at the weekly chart now. And look at this here. Really can see the difference now. The ES is above that weekly. Excuse me. ES is above that weekly 20. However, obviously the tech sector is not. And this is a bit more concerning here. Certainly a little bit more of that quote unquote risk off type of look in the market. And the tech sector really can lead most of the market down regardless. We've got 3 red candles here. And I would say that this is a little bit different, right? Look at the downturn here where we had 4 weeks and then one kind of really strong momentum candle kind of that blew us off. We looked below, and then we recapture it. Now we could certainly do the same thing. So watch again for that. If we start to see this for our next candle, it would look very similar, and that might give us a bit of a clue. But the momentum and the size of these sell candles are not the same as these. A bit more aggressive. So we have to note that velocity and momentum behind this move down versus this one. And I think that that's worth noting. Now, I'm going to actually go, well, we can look at this from the weekly, certainly, but you're going to see it a bit clearer. Here's the weekly line in the sand. Right, and you can see it's this previous weekly balance here. Now you're going to see what happened, and we were talking about that head and shoulders on ES much cleaner here on the tech sector. And really a beautiful retest. This was our neckline, and just a gorgeous retest of the daily 20, and even if we're just from the price action structural perspective, a retest of this neckline break, and boom. I think it's also interesting here, we've come right into the daily point of VPOC, volume point of control. And that is where we started to see some bidders step in and try to stop the bloodbath that we've been seeing. Just huge moves in NQ here that we've seen over the last 2 sessions. And with this counter trend rally. So what do we need to see from this daily point of view, right? Well, certainly, I mean, wide ranges still, elevated VIX as we mentioned, and we've talked about how we trade with an elevated VIX with smaller size and wider stops, wider profit targets, right? You can't trade the same way with a VIX at 20 or 15 or 17 than you can a VIX at 12. But from this daily perspective, I'm going to certainly be looking at the previous day high here, which more or less is around 18,980. No, 18,980. So from that daily point of view, unless we see trades up and acceptance up over this, it's still going to be real tough. Then we can talk about back testing this 9. I do think that we'll see a bit of a snapback. And even if this is the snapback right to the low of July 30th, I think that's fair, and that's going to give you back test about 18,700, 200 points. And then maybe we head back down to the equal lows. I don't know if we'll make a new lower low there, but we'll see. I think it would be also a good sign if by any chance we can make it over the high of this previous balance area here. get over that 9, maybe around 19,300. But really, from the weekly perspective, we're still, unless we see back over 19,730, 750, all this is just still, all this is still bearish activity. And we're still vulnerable. So all these scenarios here are vulnerable for shorts. Daily, weekly. So those are your major pivots there. All right, let's get a little more granular now and go into some day trading levels with NQ and see what we can take away from those points of view. All right, why don't we do an hourly chart? Okay. Of course, if we start taking out the previous week low, this is not going to be a good scenario. So we're going to mark that off as well. We start breaking under that 18,400. Watch out. I think would easily be dropping another 30, 40 points. And I would refer back to what we were looking at a little bit on the daily chart. But so overall, though, again, got some range to trade with here. Elevated VIX, so these are going to be a bit wider, but we've got a couple of zones we're going to have to watch, right? The data lows from NFP were around that 18,500. So on Friday, really, I was kind of using that 18,500 as a little bit of a pivot for whether I wanted to be bullish or bearish. Now with this viewpoint, it's a little bit, it's very granular. But with that being said, I would think that gonna have to get over 18,640, 35. We get over that, okay, we can start to talk about the 700s, the 750s trading up into here. Okay, we start to recapture that. All right, now we can start talking about 18,900, 1900, and stuff like that. But it is still considered a tough road, any of these. Now again, of course, this could come up here and bounce, but with the market how it's been, you'd have to consider, of course, that's it not holding and just bouncing. But certainly can consider this scenario as well. I'd be a little bit cautious. Again, I don't really want to be short down in the hole here. I want to wait for that better risk to reward if we're not on. So that, that's what I'll be watching. But, again, we've made a huge move. Watch out for this, and it's certainly tradable. I mean, 1840, 444 to 600. I mean, that's 200 points. To 700, what is that? 300 points, 250 points. So, there are trades that we can be had here, but overall, we'd have to just realize this is still bearish, even though it's tradable. And until we saw this, it's going to be tough running overall. And it's crazy to think that this is just, the Thursday or Wednesday highs. It wasn't that long ago that we were just trading up real close to 20K, right? 19,600. So just unbelievable. All right, guys, that is all I've got for NQ. Let's move it right along. Let's take a look at the dollar. It's been selling off here with rates. Look at this here. The dollar just getting absolutely crushed. Everything is backwards now. You're going to see, as we look around, you're going to see the yields going down, bonds ripping, but the dollar falling. And so usually we see, if we saw the bonds heading up, we would see the market heading up. But now the bonds are going up, but the market is going down. And it really comes down to that flight to quality here. And you can see this 104.50 just really showing us. Couldn't get over and collapsed. We'll watch this 103 area to see if we start to get a little bit of a bounce here. And now it's kind of opposite, right? A bounce in the dollar. And we're going to see a bounce in the market. Right? Usually before it was inverted. It was done the other way. A lot of room, though, here. We're not even oversold by any means. So that is definitely interesting. Let's look at the yields. Falling off a cliff. Look at this. Oof. Just getting manhandled. And again, note the inverse relationship before. If this was going up, this was making the market go down. Now this is going down, and the market is going down. And it's all about that rate cut that they're pricing in. Let's take a quick look at TLT, the flight to safety. Boom. Let's watch. Big area here. I don't think it's unreasonable, and look how far this has gone. See a little bit of a pullback. And maybe we just see some, some consolidation like this. And we get high and tight for our next move. Whoops. So that's also very possible. But I think these will cool off just a little bit. And again, inverse. Now we're going to see TLT fall and the market will go up. Normally, TLT goes up and the market goes up. But everything, it's backwards right now. So very interesting. All right. Let's go into some of our other charts. Here's some interesting things that I think can lead at least to the idea of some type of a counter trend bounce, maybe over Monday, Tuesday, and then Wednesday was kind of anyone's guess. But I think early in the week we do have that potentiality of seeing some type of a move in the other direction. Look at this, though. How many stocks are trading in the SPX over their 50-period moving average? We're still over that 50% marker. With all this selling off, we're still over the 50% marker. I think that is very interesting. If we're looking for one sign to be at all bullish, this might be one of them. another one I would say, and you can see here with that in mind of the how many stocks are trading over their 50 period moving average. Well, look at the RSP coming in, retesting this critical area here. So if there's anything, here to have a speckle of hope, volume point of control, retesting the trend line break here, coming up. Now, is it still vulnerable? Yes, of course it is for this type of scenario. But the fact that it's holding this prior breakout zone, I think, is encouraging. And this is also, you can see it here as well, but it is also reflecting in this. Now, will it stay above 50%? I don't know. Slower moving here with the 200. How many stocks are trading over the 200 period moving average? We're just in this zone here. So unless we start to see readings really below about 61, 60%, then have a bit of an issue. But this is all well and good here. A bit slower reacting, of course, with the longer period moving average. All right, so let's look at the new highs versus new lows. One other data point that I think is a bit more of a unicorn potential bullish data, factor here. Still over the zero line. I'm not sure if it's going to stay, but for now, still over the zero line. To be updated. To be see what happens the rest of this week. Will it stay? I'm not sure. That is anybody's guess. Junk bonds. Okay, we're talking about the flight to safety earlier with TLT. Well, obviously no one's going to want a piece of the junk bonds, the high yield here, so this is no surprise that it is selling off. I did want to mention here, look at this SPY. Now, these are some of the macro trends I have on SPY here. Look at how it hit this trend line. Down, retest, really pretty there. And this is from a 5-year weekly chart that I have this on SPY. So, again, always pay attention to those bigger time frames. Could give you trading opportunities that you might not be aware of if you're looking even only at the daily chart. Again, this is from a weekly 5-year chart. Look how perfectly looked above, failed, and a beautiful retest here for another short right around in that 550, 20 points ago to the downside. So make sure you keep an eye on that macro. All right, nothing here for the bonds. I would love, if we saw this moving up by chance, that would be even more of a bullish data point, at least for a counter trend move. But no one wants to do with any of these riskier bonds. Everyone wants the longer duration bonds right now. You can really see that even the 7 to 3 years getting a huge push. Normally, on a downturn on the market, we would see this going up, this down. But again, we talked about that flight to safety, the anticipation of the rates, and we are seeing bonds here, 7-year, 30-year, just ripping. No one wants anything to do with this. So it's very interesting to see this different correlation taking place. What else do we have going on here? Well, VIX futures no longer in contango. We are back in backwardation here. Oof, look at this. As long as we stay under the zero line, issues for volatility, I think it will stay elevated. This one nearly over the zero line. Oh God, the VVIX over 120, 118. As long as we stay over that, consider higher VIX going to be the norm. We've broken over that 103, 105. So again, over 120, 1819, elevated VIX to stay. VIX futures still pricing in more risk, more volatility. And the fact that we've now come into backwardation, I think that is another sign for more pain and volatility in the markets. So that's not good. But let's make an argument here for that counter trend rally coming in. Look at the put call ratio starting to get really off sides for the bears. So everybody's really piling in that short starting. We're not at these extreme levels yet, but certainly at almost over one. Have to pay attention to this. This is getting a little bit off sides. Could we see a downturn here? And if we see this drop, market will certainly bounce. I think that that's a kind of a high probability here, getting very spicy. You can see now on the regular VIX, what did we say? Hold over 1575. It's an issue. Consolidate. Boom. Just rip through 20. Disgusting here on the VIX. Let's watch this 28, well, basically 29, 30, having issues here, but as long as we stay over basically 19 to 20 elevated, I think VIX will cool off here, pull back a little bit, but still I think it will stay over 20 and 18 here. If we start to see under, okay, then we've got a different scenario. We can look for something like that, but anything even in here, this is the most bullish if we see it consolidate up here, then back up. But we can even see it down here and moves back up like this, a little bit slower, although usually VIX isn't the slowest moving instrument. I think it's up a ridiculous 50% in 1 week or something like that, something silly. But either way, a lot of people say you can't chart VIX. I am not in that camp. You can really see here how this base gave us the springboard for this move up, and we were talking as well about this kind of pattern taking place. If you go back in our later videos, and you will see us talking about this when we come into VIX, about this potentiality, and that is definitely what we got here. So just huge moves in VIX, elevated VIX, certainly going to be the theme until further notice. Again, smaller size, wider stops, bigger PTs, and elevated options premiums for all of you trading options as well. So that's also something that you have to consider. All right, guys, I think that's pretty much everything I wanted to go over for this week. Not that much data, but let's watch out. Again, we've made a huge move, so very likely that we're going to see a bit more of consolidation, digestion of the last week's volatility and move. So just be aware of that potential chop, trickier price action until we have our next catalyst with CPI, not this week, but the following week. And I hope everybody, remember what we say, trade our plan our trades. A prepared trader is a profitable trader. Thank you so much for joining me on this edition of the market analysis recap and prep. I really appreciate all the subscribers that follow me, interact with me on Twitter and here on YouTube. The thumbs up, subscriptions, all of that means a ton to me. If you're new here, please consider subscribing. It would certainly brighten up my weekend. It's free. It makes me smile. It's beautiful. All right, guys. Well, again, have a great rest of your weekend. Take care this week. Trade smart, trade safe, and have a good one.